Alright guys, in this video I'll show you exactly how we calculate standard deviation by using Google Sheet. So you just follow me what I'm doing exactly. First you just open your Gmail account. So I just open my Gmail account and go to this area, Google Apps. So click on there, just scroll down. Now I can see this one, Google Sheet. Click on there, new page opening. Right now we have seen this is a black option are there. Click on there. Now this is Google Sheet. So I'm just giving a name here, standard deviation. All right. So first here you can see this is number 1 and A column. Okay, here I can see A. Okay, let me show you. This is A column and this is the 1. Right. So here we will put a formula. Okay, you just write how I'm writing like that. What I'm writing, you just put like that. You place equals in. Just a minute, here equals in, and after that write in cap lock Google Finance. This one, okay, Google Finance, bracket start, give comma like that, and I wanna first let me write Nifty, like Nifty. It may small letter or capital letter, doesn't matter. Okay, column, okay, comma, again start. After that you just write here close. So we need a closing price. So if you want a opening price, then write open, and if you want a closing price, each day closing price Nifty last 1 year data. So you just write down here close. Okay, all right, like that, comma, and the day till today. Sorry, today. After that you just close the bracket, and we need 365 days. So if you wanna 30 days, it will be 30 days, 40 days, 40 days, or 50 days, 90 days, whatever you need. We need 1 year, so we will construct a standard deviation, right? Okay, and comma today, sorry, day, and here we close it, and like that. Okay, now you just do enter. Now I can see this is date and this is the closing, right? This is the date and this is the closing price. So it means every day closing price, each day closing price. Now I can see 330. Yeah, have you seen it? 330, and this is the closing price. So if you need opening price, and you just write here open, OPN, and enter. Now I can see this is the opening price. So we need closing price because we're gonna use standard deviation, right? Close. Okay, and here you can see you can change the script also. Now I can see this is the Nifty. So let's see, suppose we need Bank Nifty. You write down there Bank Nifty and enter. Now I can see this is the Bank Nifty data, closing data each day. All right, so okay, we'll continue with the Nifty. So let me remove Bank Nifty. Okay, nice. All right, Now we need daily return. So let me type here daily. What we need to return. Okay, this is we need daily return. So for daily return, we will create a formula just below. Here you can see this is the tree. All right. Have you seen this is the tree column? Have you seen this tree column? And we'll type here in C. All right. Okay, whatever say doesn't matter. And exactly put where I'm putting this formula. So what you will write here, you'll type here is equal bracket ln, remember ln bracket start b3 which one b3 we're gonna divide divided by b2 okay, and bracket into 100. All right, we need a change. Now you can see this is the rate of change. Have you seen? Now what I'll do, I'll drag it. All right, just okay, here C column. Now you can see this is the rate of change. Now here you can see last 3 days price continuously falling down. Have you seen? Minus. All right, let's check it. This is Nifty chart. 1 day, 2, 3 days continuously price was falling. All right, so that is indicating. And fourth, right, that was positive. Let's check it. The fourth is positive or not? Yeah, fourth is positive, almost 1.5% up. Okay, that's good. Okay, that is our daily change. Okay, now I'll create a standard deviation formula. So first let me write like that, and suppose this is lower. Okay, lower, and let's write here upper, and next lower price, third upper price, or price. So you make it like right like that. Okay, whatever. So in this area I'll write one standard deviation, the short form, one standard letter. Just click on write 1 2 3. We need only 3 standard deviation. All right, so now see here, I'll put a formula here. Okay, so you type like that. The formula is here, you can see, just type like and equal and write in capital letter average. Okay, capital letter, remember, otherwise formula will so it will show arrow like that. Okay, so this one, now we need C bracket close. We need minus, this is upper, so we need a minus, remember. Okay, this is the one standard deviation, so that is why we will write here 1 into, and right here capital letter standard deviation, short form ST deviation. Okay, sorry, DD, and after that you just close your start bracket C, just let me see, C, and close. Okay, so C means this entire column. All right, we are calculating daily change. All right, entire this C column here is in daily return. So after that we just click on enter. Now you can see first deviation is showing minus 2%. Okay, now what I'll do, I'll click on there and put it like here. Now you can see it's showing same. Now we'll modify it. Okay, so what modify? Now here you can see this one somewhere here -1. Okay, next this is 2, so we'll change to 2. That means 2 standard deviation. Have you seen? So enter, and another here you can see we'll change to 3. So this is the 3 standard deviation in a lower case. Have you seen? Have you make it? Okay, now you can see this is our percentage, change of percentage. Okay, I'll show you later. Now let's go to upper. Okay, same formula, just copy this one and paste in upper. Now you can see it's showing different, but what we will do, we'll change to CC. It's showing C, D, but we'll write here D. Sorry, we'll remove D and write here C, and this minus it will be plus in, and this D we need C. Alright, C. Okay, C. Okay, have it make sense? Okay, so we change it to positive. Alright, that was negative. Have you seen this one? Negative. Yeah, let me zoom a little more. That was negative 1, -1, and now we change to positive in this area. So you can see that is positive. This is the plus symbol there, standard deviation. Okay, and now same thing we're gonna do here. Click on here and change to here 2 standard deviation. Click on enter, and here another 3 standard deviation. 3 standard deviation. Okay, now you can see this is the percentage change. Alright, daily percentage change. Okay, maybe it may change that much. So now we will convert to price. What is the real price right now? Closing price somewhere here, this one. Alright, 11,073.45. that is a closing price, last closing price. Okay, now we need a real data. Alright, actual price. So you just put the formula what I am putting here. Now we need lower price, and the formula is write down equal. Sorry, write down is equal. Just a minute. Yeah, equal B245. Why I wrote B245? Let me show you. B245. This one. Have you seen? This one means last closing price. So suppose next day they form here. All right. So we'll write B246. Now I can see that. Means zoom a little more here. Have you seen this? This one B245 and colon is B. This one B. Have you seen this one B? B245. So where is the 245? This one 245. Have you seen? Okay, nice. So let's go to here. Okay. After that, then we place. First, you just start with a bracket. Now into okay, bracket start. We need F column, this one, this column. We need this column. All right. So we can click on there. Exactly, we click here. Have you seen? Not like that. Just a minute. We need F5. Have you seen this? F5 slash or divided by 100. Sorry, bracket close. Plus we need B245. That means last closing price. Make sense? Okay, now click on enter. Now we have seen this is the lower price. Okay, lower price, and just do it like that and click same here. Okay, now we change it. Here it's showing 265 and 46 million 5, and somewhere here 5, enter. Everything is showing 47. We need 5 column, last closing price, that is 5, 245. So you just place on 5 divided, enter. So we have seen lower boundary, okay, or you can say supporting line. Now let's see in an upper boundary or upper price. Okay, just a minute. Here is the formula. You just click on is equal, just a minute, is equal, start double bracket, now right here B245 means last closing price. All right, this column is here, figure detecting from there, into we need Z, this Z, have you seen this Z, and 5. Okay, and you can write manually or you can type here G5. After that you just write close first divided by 100, bracket close, plus last closing price B245, that is the upper boundary. Now you can see 11,285. This is the resistance or upper boundary. Okay, now here just click on there and change to here, again change, make it 5, and here also make it 5. Okay, enter. This is the 2 standard deviation, and this is another 3 standard deviation will be here, and place on 5, and this is the 3 standard deviation. Okay, now means this area is showing the resistance line. Okay, I'll show you exactly how we identify. Now you can see okay, so wait, now you can see here this is the percentage. Now you can see this is the upper boundary. Okay, let me change the color. All right, one by one, change the color. Okay, this is here you can see, let me zoom a little more, or sorry, okay, let me make it bold. Let me change the color, actually color more reliable, red. Okay, and that is probability that price may stay 68.3 percent probability price will stay in between this range. And next let me change the color to green, let me make it a little more bold, and it is a probability of 95.5% price may stay in between this area. And the third, let me change the color. Okay, which one will good? Yeah, that one. Okay, make it bold. Yeah, so here I can see probability that that is a 99.7% probability price will stay in between this range. Now let me show you how we identify in our real chart. So first we have seen this one, and here you can see this is the probability price may stay in between this range. Okay, and let me remove this area. Okay, just a minute. Okay, just a minute. What is the probability? 300. Okay, this is the probability, first probability, and let's check it. Next probability, 10,600. let's say 10,600, 10,600 almost. Yeah, here and upper boundary, let's check it. Where is the upper boundary? 11,500. Okay, 11,500. Where is the 11,500? Somewhere here. Okay, and third one, 10,400. Where is the 10,400? I think 10,400 will be somewhere here. Yeah, and upper boundary 11,745. Let's say 11,700, 11,745, 11,745. Let's say around here. Yeah. Now I can see this is the range, and then let me show you exactly here. This is the first probability. Okay. Next, let me change the color to blue. This is the another probability. Okay, let me change the color actually. Yeah, green will be fine. This is the another probability, and the third. Okay, which one will find good? And yellow. Okay, this is the yellow. This is another probability. Okay, have you make sense? Okay, now we can see that right here. Now this area means one standard deviation. This is called one standard deviation. Okay, and where is 68.3% probability price will stay in between this area, this range, and another this one, two standard deviation. Okay, this is the two standard deviation, and it's a probability that price will stay how many percent. Okay, so it will be 95.5, and it will be 95.5, 95.5% probability price will stay in between this area, and another, this is the three standard deviation, deviation, that is a probability 97.9. all right, so I think 97 point, I'm showing 99.7. just a minute, where it gone? Yeah, 99.7. so 97.7. so this is the probability. Okay, by using standard deviation. Now I'll show you how we construct this option strategy by using this standard deviation. So let me remove this one, and this one. And this one. So let's say suppose we are focusing on one standard deviation, and we create an iron condor or a source triangle, whatever. Okay, so let me show you exactly how we construct. Okay, now I'm using option analytic. So here I can see this one Nifty, and we need option. Let's say next recent strike price we're gonna apply. So 6th August, and I'll change to 6th August. And the first okay, select strike price. Yeah, okay, so first strike price, what is the first strike price? And let's see, 11,300. so 11,300, 11,300. okay, so we'll sell it and call at. So is first it's look like that. Have you seen? First look like that, and the lower boundary is 10,850. I just put 10,850. okay, So now you can see this is a option strategy. So now we have seen we're gonna collect premium here. First here you can see 33 and 32 rupees will collect if we construct. So why we construct this strategy? So we are believing that price will stay in between this area till expiry according to standard deviation. All right, and I can see we are constructing different strategies, so later I'll show you definitely. So you subscribe my channel and I will show you exactly how we placing order in a live market by using standard deviation. So thanks for watching.